just over 75% of the S&P 500 companies having reported second quarter earnings, we're beginning to see how corporate America is navigating the complexities of the Trump administration's evolving trade policy. I'm Michael Drozd, CIO at LaSalle Street. In this episode of A View from the Street, we'll explore how the remarkable adaptability of U.S. companies continues to support resilient equity market performance, and how recent labor market revisions may serve as a constructive tailwind for more accommodative monetary policy and could act as a positive catalyst for U.S. equities as we head into the back half of the year. Aggregate earnings are up over 9% year over year, a sharp acceleration from the 2.5% preseason consensus of mid-July. This marks the strongest earnings beat rate since the third quarter of 2021, underscoring the resilience and adaptability of corporate America. S&P 500 revenues are currently tracking at approximately 6% year over year, reflecting a stronger than expected top-line environment as well. Yet investor positioning remains notably misaligned with this constructive backdrop. And as we approach a seasonally softer stretch for equities, the persistence of bearish sentiment on Wall Street may set the stage for further upside. If expectations remain overly cautious, the combination of resilient fundamentals and underexposure may continue to fuel a positive equity market performance through the end of the year. Markets are now pricing in an over 90% probability of a 25 basis point rate cut during the September FOMC meeting. This follows disappointing July jobs data and a downward revision to prior months. Inflation has also moderated to 2.7% at the headline level and 2.9% at the core level, giving the Fed room to ease without jeopardizing its price stability mandate and further easing financial conditions in the process. And while we do anticipate tactical pullbacks, particularly as we enter a seasonally softer stretch for equities, the depth of these declines is likely to remain limited. Under allocation across portfolios, combined with increasing institutional performance chasing, may continue to provide support into year-end. This is further reinforced by a supportive earnings backdrop and financial conditions that remain broadly accommodative. Thank you for joining this edition of A View from the Street. For deeper insights, please explore our latest publication or reach out directly. Thanks again for tuning in.